And joining me for more analysis on what's driving gold and commodity markets, we're joined by Jonathan Barrett from Commodity Broking Services and Peter Turnbull-Ince from Compass Markets. Gentlemen, look, thanks very much. Jono, I might quickly start with you. We did see gold off a little bit overnight, but suggestions being it is still the place to be.
Yeah, James, it is. I think that uncertainty out there in the market has certainly seen investors continue to buy the precious metal. I guess when you look at face value, you've got to start to question whether or not a bubble is forming, because we know that some of these restraints will come through and they will pass it. But at the moment, you just see people going towards it. So any sign that there is continuing concerns, they like it as a choice. So at the moment, I think dips are well supported until they come out with a solution, and then I'll be wary.
Yeah, Peter, that's got to be the issue, because you have to imagine if there is a solution, it won't just fall, it'll fall big.
Yeah, that's what we see. We've obviously been supportive of the rise that we've seen so far, but we're in the short term quite bearish actually. So we actually see people locking in profits at these levels, and we see more of a buy the rumor, sell the fact situation playing out, because they will raise the debt ceiling. We can't afford for them not to. So I'd see a good $50, $60 pullback happening in the next week or two. Do
you look at what happened with Greece? Obviously, that had been an ongoing issue, and not so much with gold, but with the reaction in equity markets when they got that deal. Everybody was jumping on board. Would you expect to see a similar story with gold, but on the sell side?
Definitely, yeah, definitely. I don't think it's going to be a huge sell-off, but I think it's going to be a very sharp and fast sell-off. So we'll see a quick $50, $60 move back to $15.50, and then we'll start trailing back up to the upside. We'll see a US dollar bounce, and this is what's going to cause it, and we'll also see equities rally, and people will start to pile back into equities.
Jono, would you agree, I suppose, with those levels that potentially be tested, and does that just mean another buying opportunity?
Look, I think when you look at how gold is placed, the pullback can go. We've got signals around about 1540 as an area. The question is, this is just a hurdle in the trend for gold. At the moment, the trend is still intact. So I think if we do get that sharp sell-off, then that's the area to buy. As to whether or not I'd go short at these levels, I think I wouldn't, but I'd rather look at an area to actually buy it, and I think that's a reasonable prospect down near that 1540.
So you don't think it's too late to potentially jump on it, you know, in the next few days?
James, no, I wouldn't be jumping on at these levels. What I'd be doing is just waiting. As we've looked at it, there is this potential for that bubble to form. You might get an exhaustive move up through that 1630 to 40 if something happens. I think the worst thing that could occur is that they delay any decision, because delaying the decision will suggest to people, well, there's more smoke. There's smoke and there's fire and it's all happening, so then people will continue to buy it. The top end of the trend we see at the moment is around 1660. So in my mind, if you are long, look for that 1640, but I would not be adding to positions at these levels at the moment.
Peter, the drive obviously at the moment of gold has been that safe haven play. I mean, it wears many different hats at different times, I suppose, but what about, is there much of a fundamental demand for gold itself, for the bullion?
Oh, there sure is. I mean, definitely from central banks. We've seen, you know, Russian, Mexican and obviously Asian central banks diversifying their US dollars and getting into gold, silver markets, and also natural demand out of India. So yeah, there is solid demand there. But if we want to look structurally in the long term, we are going to see US dollar weakness for a long time to come, and this is going to continue to prop up the gold price along with inflation, because we will see a recovery in time, and this will prop up inflation, will prop up demand for gold.
It's yeah, sorry, go Jono.
Yeah, one of the other interesting things is that the supply-demand deficit for gold is quite crucial, and this is why we like the trend to continue. Just over the last quarter, we lost 4% of supply, whereas investment demand was up by 26%. So when you start to look at those numbers, it certainly gives you a good underlying story that without that supply and any concern, whether it's inflation, geopolitical, will still support the price on any dip. So the supply demand is very tight. That'll still keep the story alive to buy gold on dips.
And do you agree, as Peter was saying, because gold does wear a few hats, I mean, once you get over the debt issues, you can start to look growth in it, particularly the Asian region and the rise of inflation, and again, gold becomes a play.
Oh, look, unbelievably, we just had numbers back from China, believe it or not, on pork. Pork is up 51% from the same time last year. So you've got this food inflation concerns, which are a real issue in China at the moment, and that in itself will just continue to support gold, because in China everyone knows it and it's a flight for them. So that's another underlying theme that will really help it.
Let's quickly cover oil. Peter, what are you making of the movements of oil? Obviously a little bit subdued at the moment. I mean, is it the expectation of this ongoing release of barrels of oil to make up for those concerns we saw earlier in the Middle East, or not so much?
I don't think so. I think it's, if you look at the markets broadly, no one's really keen to take a position at the moment. Everyone is sitting on the sidelines, especially fund managers. You don't want to be short, you don't want to be long. We could see a big reaction. We did see API and Energy Department data see a rise in stockpiles recently, but that's one blip in 7 weeks of decline. So I'm actually very bullish on oil. I see it going substantially higher and well above $100 into the future.
Jono?
We're short.
We need to get you guys together and make your own little market.
I think that's probably right. We looked at the data last night and we saw quite a large increase in inventories on it. So we're short with a stop at 101.25. We'll see how it goes, but we think the fundamentals are quiet for a little bit turnaround and back down to that 95, 93.